Only if you turn it on. Good afternoon, everyone, and welcome to the Budget and Finance Committee meeting for the City of Franklin. This is Thursday, June the 8th, 2023. We will open the meeting with a call to order, and we'll do that with a roll call vote. Alderman Peterson, how do you vote?
Present.
Alderman Potts, how do you vote?
Present.
Chair votes present. Let the record show that Alderman Baggett is not present. Let's go to item 2. Item 1, it is on the agenda, approval of minutes. Do we have any additions or deletions or anything to any of the minutes? If not, then I'll accept the motion on the minutes.
Please, ma'am. Second.
Proper motion and a second. Let's do a roll call vote on that. Alderman Peterson, how do you vote?
Yes.
And Alderman Potts, how do you vote?
Yes.
And the chair votes yes on those. The minutes are approved. Let's go to item 2 then, which is new business consideration of procurement award to PFM Financial Advisors, LLC of Memphis, Tennessee for municipal advisory, financial advisory services for a term of award for the Finance Department Purchasing Order Office Procurement Solicitation number 2023-006, contract number 2023-0137. Christine, do you want to lead that off?
I will. Thank you, Chairman Barnhill. This procurement award for municipal advisory services, this is a service that the city does utilize a licensed municipal advisor to assist us when we do issue debt. That is a requirement to use a licensed advisor. The city of Franklin does not issue debt every year. We have actually not issued debt in about 3 years. Or it's about 2.5 years. However, we do use our advisor for assistance when we do not issue bonds for certainly surveillance, help us with our rating agency relationships, just general questions and that the board may have regarding debt. And certainly they provide us a great deal of service, even though we do not issue bonds on an annual basis. We did have a committee of 5 staff. We were facilitated by our purchasing manager, Brian Wilcox, to evaluate proposals. We had 5 proposals that were evaluated, and the staff committee gave the highest combined score to PFM Financial Advisors. And the staff does recommend to this committee for your consideration to recommend to the full board a procurement award to PFM Financial Advisors.
Any questions? Brian, Mike, Margaret? Okay. Then if there are no questions, I'll entertain a motion.
Move for approval,
To recommend approval.
to recommend approval to the full board.
Second.
And proper motion and second. Let's do a roll call vote on that. Alderman Potts, how do you vote?
Yes.
And Alderman Peterson, how do you vote?
Yes.
The chair votes yes on that also. So it does pass. It will be going to the, will this will be on the workshop agenda?
With a unanimous recommendation from the committee, it may go to the consent agenda
Absolutely.
unless
Yeah.
one of
I
you
have no
believe that
objections
it
to
should
going
go to
the
work
consent
session.
agenda. All right, then let's go to item 3, which is consideration of resolution 2023-27, a resolution adopting a revised purchasing policy for the city of Franklin, Tennessee, procurement not pertaining to the design and/or construction of new infrastructure and facilities. Christine, you're up again.
Well, I would like to introduce Brian Wilcox, our purchasing manager, and he is here to just walk through some of the recommended updates to the purchasing policy.
Thank you, Christine, and good afternoon, members of the committee. Staff recommends the following changes by way of updates to the city's purchasing policy. First, in Section A, to cross-reference the city's lease accounting and reporting policy as approved by Resolution 2021-96 and modified by Resolution 2022-44. In Section B, to cite a section of Tennessee Code Annotated, namely 12.3.1201, which is entitled Public Purchases for Local Governments, under the responsibilities of departments. In Section D, to update which services qualify as professional services. And in Section S, to update for which professional services requests for qualifications may be issued. And then to make miscellaneous other improvements to the policy. You have a red line version of the revised policy as proposed. This red line version has marked all of the recommended changes, including the more substantive ones that I've just enumerated. Staff recommends that Resolution 2023-27 be recommended to the Board of Mayor and Aldermen for approval.
Any questions?
Thanks for the red line. Appreciate
Yes.
that.
Yeah.
If there are no other questions, I'll entertain a motion.
I move that we recommend approval to the Board of Mayor and Aldermen.
Proper motions are a second.
Second?
Let's do a roll call vote on that. Alderman Potts, how do you vote?
Yes.
And Alderman Peterson, how do you vote?
Yes.
And the chair votes yes on that one. Let's go to item 4, which is consideration of draft resolution 2023-32, resolution to update the city of Franklin lease, accounting, and reporting policy.
Good afternoon.
All right.
I actually this afternoon have a team with me to talk about this item and the next item.
Okay.
But it's to stay within the area of policy. The finance department each year tries to look at current policies and bring to the committee here in June potential updates. And the first potential update goes back to that lease accounting and reporting policy that Brian just alluded to. And from an accounting standpoint, when this lease policy or lease guidance first came out, it sounded so complicated as we were sitting there listening to presentations. But with the policy, generally, really, all it goes down to is that if you have a lease that is over 12 months and per the policy over $50,000 in total payments, they just want to see an interest component because you're receiving payments over time, just like you would anything that has interest with it. So if you have a $100 payment that you're making or getting and the interest rate is 5%, they just want to see lease revenue or expense of $95 and interest of $5. So that's really what the policy does. But since we've done the policy back in 2021, there have been 2 things that have changed, and Margaret is going to actually help me with the first part of the change, and then I'll come back with the second requested change.
Afternoon. GASB has graciously given us another statement. This one is GASB 96. What this one does is it adds software as a service to the list of leased assets of land, buildings, vehicles, and equipment, which Mike just referenced as 87. So these now apply to the policies. Just to give you an idea, this is a piece of software that we don't own, but we have rights to use. So like our timekeeping software with UKG. So since we make a payment, part of that will be interest, part of that will be principal, and we will be tracking that starting with this fiscal year.
And going back to the second part of the requested update, It goes back to that when we first heard about the statement, we were thinking about where would you see it? And we always knew that we do certain financial statements for audit, but there are certain financial statements that have budget in them. So when we wrote the policy, we wrote it basically saying that we knew that it was in the audit statements, but was it really in the budget statements? And what happened was during implementation during fiscal year 2022, we realized they wanted to see this interest component in not only these audit statements, but they did want to see it in the fund financial statements. So as you've been working on the 2024 budget, one part of that has actually been lease interest. And for this standard and this policy, there are only 2 leases that it applies to currently. It is the lease of the building 5 Points to First Bank. And the second one is the Harlansdale Arena lease with the Friends of Franklin Park, because both of those, again, go back to over 12 months and over $50,000 in total payments. So that is one, is essentially just to say that it's in both types of financial statements. And the other part of it is the description of the annual report used to be called the Comprehensive Annual Financial Report. And we're trying to change that consistent with what we're hearing, that we need to change it to be the annual comprehensive financial report. So essentially just changing the way it's listed in the policy. And with those 2 changes, we would make a recommendation that maybe there be the committee make a recommendation to the full board to approve these 2 changes.
Any other questions or comments? So the Franklin, whatever,
Yeah.
Friends of the Park,
Yeah.
even though they are I guess a 501c3, they still pay interest on the lease?
That's it, absolutely. And what happens is, it doesn't change the amount that's been negotiated. It's just the standard in the policy wants a portion of it to be designated as
As interest.
interest instead of as lease.
And what you just asked, the question you just asked is probably one of the most difficult parts of implementing the GASB statement, is that these, there really may not have been a, especially with a nonprofit, that wasn't a contemplation of really charging them interest. So we had to back into the standard of interest would be given the accounting policy, the accounting statement. So it was not, it does not change the actual payment that comes from the entity, but we do have to break it into two pieces. So that has been exactly something that's been a challenge for departments in implementation to wrap their heads around.
Good afternoon.
Good afternoon. Hello, everyone.
And I may be ahead of myself, but what does the current post office issue with not having a post office, what does that do to the lease? Does the bank lease the whole building and then sublease to the post office?
That is correct.
Well, you know,
The space that First Bank occupies, which is most of the building, there is the basement we do use for storage, but within the lease agreement between the city and First Bank, it does state that there is a desire on the part of the city for the bank to sublease to a contractor providing postal services. So that is something that I know that there's been city staff in contact with First Bank expressing that there is a strong desire for that. There's still to be postal services there, but apparently the contractor has left, and until another contractor is approved, is identified and approved, that is something that First Bank has to work with within the space that they have in their lease.
Follow-up question, and I apologize, this may take us down a little bit of a rabbit hole here, but regarding that contractor that you said is no longer going to be the vendor providing the postal service there at 5 Points, do we know how long that contract was? Did they fulfill that contract and choose not to renew it?
I don't know that information because there is no agreement between that subcontractor and the city.
Right.
In fact, several months ago, we as staff had a reason to work with First Bank on just some terms of the lease in which they're under. And there was a request to understand more fully the relationship with the post office contractor. And we had just gone through reviewing that contract, that is a separate subcontract under First Bank. There's nothing in the city's records of what those arrangements are with the contractor, because the city's not a party to the actual sublease with the contractor, who apparently has just left. But some city staff who unfortunately is not here this afternoon, I know has been in contact with First Bank. I've been told that they have been. So we will certainly follow back up, but there will be, it is with First Bank to make a new sublease with another contractor.
And do we know if on our contract for that lease with the bank, is that a requirement of the lease, or is that just an option that was built in? And I recognize that this.
When we went through this, and our law department, of course, worked with us several months ago, but I don't believe it's really written as a requirement. It's strongly desired on the part of the city for there to be space available for a contractor. But I don't know that I don't believe it's actually a requirement, but I will, but certainly as we go through this process, I'm sure that that's being looked at by city staff.
Yeah, and I might, just because this is time sensitive, and I recognize that this is taking us, it is relative, but it's not specific to the item here on the agenda, is if we could actually provide that information for the next work session, if it is available. I know that our assistant city administrator, our city administrator might be able to provide that, and that might be of benefit for this coming Tuesday's meeting, so that we can provide the public with that information. I know that there's been a lot of communications back and forth with the Postal Service as well as with the bank.
I believe that would be feasible
Okay.
and certainly I will relay that to our city administrator, and I'm certain that he is getting other inquiries as well. So I will definitely relay that on.
Thank you.
Even if that's not on the agenda, whoever's going to make the report can make it as a non-agenda work on the work session. So it should come up somewhere.
Right.
Next Tuesday night.
Right, at a minimum in new business.
Yep.
I'll definitely relay both. I'm sure it's from all three of you have an interest in that, so I will relay that to the city administrator.
And I know that even though Alderman Baggett is not here right now, I know that he and I have actually had communications with multiple residents that are using that, and there's a very, very strong desire, as we've all heard, to keep a postal service vendor there.
We have heard the same comments as well. But thank you. I will make sure that gets relayed.
Any other questions or comments?
Anything to add?
Then I'll entertain a motion to approve this update of the city's accounting and reporting policy.
And to be recommended?
Yeah, recommended.
Okay, so moved.
Proper motion to a second.
Second?
Still a roll call vote on that. Alderman Peterson, how do you vote?
Yes.
And Alderman Potts, how do you vote?
Yes.
And the chair votes yes on that. Now, item number 5, consideration of draft resolution number 2023-33, a resolution to update the City of Franklin's uncollectible accounts receivable write-off policy.
This afternoon, Jessica Davey in Revenue Management has joined me because this policy impacts her as well. And the thing about the AR write-off policy that was approved, it provides criteria and the procedure for write-offs. And what we wanted to let the committee know is that the policy does not impact revenue. In essence, once it went to delinquent status, the city basically at that point said they felt that it wasn't likely to be collected. So what the policy does is, from an accounting standpoint, from an audit standpoint, it lets us reduce the receivable. So that way, in essence, as we're showing the books, it doesn't appear that monies that may not likely be collected are showing. So like right now, as of the end of last year in utility billing, there was about $1 million showing in accounts receivable. And the thing is, we looked, and about 190,000 of that is over 15 years old. So it's one of those that some of these numbers with the policy, if they can be written off to remove that receivable, then that number reflects better what we believe can be collected. So that is kind of why that when, I'm going to cover the first part, and Jessica, if you didn't mind covering the second, is we're asking that the thresholds in this policy be increased to match the thresholds in other policies. Last year, we knew when we came to you, we had just approved this policy, so we held off. But we thought that if we could have the same thresholds, then in essence, there would be that consistency. But we just knew that even if it is raised where the assistant city administrator, CFO, can write off up to 20,000, and the city administrator can write off even up to 50,000. Again, it's not $50,000 of revenue being adjusted. It's simply that accounts receivable that is being adjusted. And the policy does provide that whatever's written off, a report is made back to the Board of Mayor and Aldermen. And this, yes.
You
You're looking at me. Do you have a question?
don't think you're gonna collect something that's 15 years old?
Well, it's highly unlikely, and a lot of effort has already gone into trying to collect it. However, we did want to add, and I guess this is maybe a good segue into my portion of the update to the policy, a stipulation or a clarification rather, that should circumstances change and we deem it to now be collectible, that we are not barred from collecting it.
Okay.
So there's an additional subsection in the new policy.
You can't go back on
Right.
that
And
debt.
and an example of that is someone moved out of the city and left a utility account and then was gone for a number of years, but then came back and applied to come back on. And we always check to see if you owe the city for any utility bills when you want to come back, when you want to come back on the system, and then we can require, collection of something that maybe it's been several years if you haven't been here. So that's an example of that. Just because it's something, an uncollectible bill, going through all the collection steps, the collection efforts, we weren't able to collect that. If several years down the road, if there's an opportunity to collect that past due bill, the city is able to do that. While it may not be a common example, it is an example of, there are sometimes someone leaves a final bill and then at some point in the future wants to come back on the system again.
Any questions on item 5? If no questions, then I'll entertain a motion.
Tell you what, Mr. Chair, I do have a question. Just because, you mentioned you got 190,000 over 15 years. So what about the other 810? As you're looking at that, how is that broken down? Do we see, is there I guess where I'm going with this is, our current collection efforts, how successful would you say that they are right now? If currently we've got $1 million sitting there, we're writing off 190 at 15, and as you said, you've exhausted all means. What do we need? Additional resources? Do we need additional collection vendors? What do we need to do to recommend to get that money?
We do use a collection vendor, and we're actually getting ready to go out to bid
Okay.
for that contract. It's time to renew it and to do a request for proposals for that. I don't have a lot of specific details into the efforts that they take. I can certainly get more information on that if you would like me to do that.
I would mention also that in the nature of how we do our financial statements, that when we have the line for receivables, of course, it's a point in time, and it's June 30th, for us. But there's a good number of bills that are just in the natural collection process on June 30th, because we have 5 cycles of utility bills that are issued on the 30th of every month, and they're not due yet. They're due on the 15th. We have some bills that were due in the 45, 60 days before June 30th, that while they are still in our collection process, maybe people, they've had a penalty applied, but they're likely to pay, just because some sort of circumstance they're delayed, and the bill's outstanding on June 30th, but they're going to pay it probably within 30, 45 days of June 30th. So we just want to make sure that what we report as receivables is, as Mike described, is as accurate of what is likely to be collected. And on any point in time that we report a receivable, there's a good number of bills that are just in the collection process. They're outstanding, but they're very likely to be paid. And I know I was working with Revenue the other day on an account for a customer who had been on our system as long as we currently are able to show the records. And this customer always pays within, for years, she's always paid within 5 to 7 days of the bill being issued. But there's a point in time that bill's a receivable. But she's paid on time for 30 years. So there's a lot of that in the receivable line, that it's good. It's a very good receivable. It's just, we want to make sure that we are reporting the percentage of the receivables that are not likely to be collected. But most of it's good.
Good. Any other questions? If not, then I'll entertain a motion.
We recommend this approval to the Board of Mayor and Aldermen.
Proper motions are a second.
Second.
Let's do a roll call vote on that item. Alderman Peterson, how do you vote?
Yes.
Alderman Potts, how do you vote?
Yes.
And the chair votes yes to that, so we will send that to the full board. Item 6, financial report for third quarter of FY 2023.
That is me.
And it is Margaret.
If you have had a chance to look at the summary and look at your quarterly reports, you will see we are sitting at a current surplus at the end of the third quarter of $13 million for the general fund. So I've been here for just shy of 5 years, and I think that's the largest I've seen. And I think Mike has mentioned that's the largest he has seen. So this.
We did last year. We were slightly ahead of that last year.
Okay.
We were actually, I think, at just to clarify, we were at 18.
18, okay.
And
That's more than slightly.
yes, we were at 18 last year.
Okay.
And while we did not end up at the end at 18, because we do have a lot of bills that we pay in the fourth quarter, and the board did some one-time transfers last year at the last, that, for example, putting some money into the closed pension, additional contribution, did money for a vehicle replacement last year. So I do want to clarify that
Thank you.
this is significant. $13 million at the end of the third quarter is significant, but the last year we did. This is the first year. I will point out that while it's 13 million versus 18, this is really the first year. We had a couple of years that we had some grant monies that were related to the pandemic process, both on the state level and the federal level, and those monies came in early in the year. So the cash flow on the general fund has been different for fiscal year 21 and 22 and 23 that we're finishing now. This cash flow, which we had a deficit at the end of first quarter, and then we built in second and third quarters as property taxes were billed and collected, and the holiday period of sales tax came in. This is more of the normal cash flow for a general fund than certainly you have seen in the last 3 or 4 years. So I'm sorry, I do want to make that
No,
clarification.
thank you for that clarification. Hotel motel taxes are also continually show strong. They're at 19% higher. I did want to point out with the water and sewer fund, it currently shows a deficit, but this will not be the case at the end of the year once we convert the liabilities and capital assets out of expenses. And then interest income is becoming a positive state again as we are replacing lower interest rates with investments.
Do you have a number on the interest rate?
Do you remember, Christine?
We are now on the total portfolio of around 2%. We are principled in our reinvesting. Every month, we have a city investment that matures, and then we place that investment maturity out within usually somewhere within the next 3-year time period. And for quite a while, we had very low investment rates, and we had some investments that are maturing now that were at 25 basis points, 50 basis points, and we're replacing those with 4% investments, 4.5%. So as we've been replacing, and also something that we note in these reports is that we are required by accounting standards to book our investments at market values. And when we had those investments with very low coupons, then the rates are rising. Those market values were at losses, even though we hold to maturity. We don't receive losses because we hold to maturities, but the book values go down in a rising interest rate environment. And so now that we've been able to reinvest at these higher rates, we have much better book values of the portfolio.
Any other questions of Margaret? Mike? If not, then let's go to monthly reports for June 2023. Margaret?
I just have 2 highlights for the monthly reports. Once again, with local sales tax, March reported over $5 million in collections, and that is the 3rd time this fiscal year that we've collected over $5 million. And then also the conference center has reported a profit for 8 out of the 10 months in fiscal year 23.
Well, good for them. When that's up, there's a lot of other hidden things that are up.
Right.
Any other questions?
Well, it always, with things like development fees and everything, it's always saying this just depends on, what. But it'll be interesting to see how, say, the last 3 or 4 years have, meet up together with what's going on right now, because some of the things 3 or 4 years ago were in the middle of what they were doing, and so they just kept on, but since then, I've just wondered if that's.
We agree. It will be interesting to correlate that with what's happened with borrowing rates. And if any
Good
of the
point.
builders, whether it be commercial or residential, are, if pulling their permits and paying fees, is there a relationship to where borrowing rates are for them at the present time? So that, we have that same curiosity as well.
And it's not just building permits themselves, but things like road impact fee or facilities from city and county, they're all not what we had expected. Not what we had projected. I'll put it that way. That's a difference there.
Any other questions of Margaret or Mike? Then, do we have anything else to come before the committee?
I do have a point of housekeeping at your stations. If you could bear with me just one more moment. There's a schedule that's highlighted that you will recognize where it says 2023 Budget and Finance Committee meetings. And I wanted to just circle back that here we are in June. Hopefully you're still agreeable with the summer break in July for this committee, and which would leave us 4 meetings for the rest of this calendar year. And the dates are August 10th and September 14th, and those fall on the second Thursdays, as you're accustomed to. October 19th is a week later than you're accustomed to, but the local school districts have a fall break, the 11th to 13th, and we know that there can be conflicts there, so we've moved to October 19th. And then November and December has historically been a combined meeting, and that is here for December the 7th. I do have 3 of those 4 meetings have some special guests that are confirmed that are on your schedule that you have heard from in the past, but wanted to let you know just what you have coming up. Those are always really hopefully important reports for you to see what's going on. We work with these folks all the time, but it gives you an opportunity to hear their report and ask questions as well. So just wanted to give you this preview. Make sure that this looks agreeable to you, and if you had any questions about the calendar for the rest of the year.
Thank you, and Margaret and Mike, thank you. Jessica, thank you. And if there's nothing else to come before the committee, I'll entertain that motion that we so cherish.
I move that we adjourn.
Proper motion to second.
Second.
All in favor indicate by saying aye.
Aye.
Any opposed? Hearing none, we are adjourned.